What's going on YouTube? It's your boy Josh FX. Welcome back to another great YouTube video. So as you know guys, last week I started a new series known as Trade With Me series. In this series guys, I'll be analyzing the market. I'll be breaking down the charts with you guys. Any trades that I would have taken with either me or my community, I will be sharing with you guys. So we shall be breaking chart work. So this series it's all about chart work, about analyzing the market. So I'll be sharing both my wins and losses. So this is episode 2 of Trade With Me series. If you have not watched episode 1, make sure you go and watch episode 1. So without wasting time, let's get and hop into the market, guys. Yeah, so this is gold, 1 hour time frame, and today's date is on August 5th, 2026. So let's start. So as you can see, we had already marked our big impulse move. It was bullish. As you can see, the market is on bullish. So we had already marked our top high and our top low, then our liquidity point, but there was no retracement. Price was just going upwards. So that's what happened. Then right here we had our main zone. So we usually have a concept known as the main zone right there. And then this was our main setup right here, the bullish big impulse move. Then price broke our main zone. So immediately price breaks our main zone. What are we supposed to do? We usually have a concept whereby we usually call it a market structure, or we apply power of one. So we usually have to switch to the 3 minutes time frame, and now we start applying market structure. So we switch. So the 16, the 4 p.m. 16 p.m. candlestick closed above and broke our main zone. So we start applying market structure on the 17 or the 5 p.m. candlestick. So we switch to the 3 minutes time frame. Then we start on the 5. So 5 a.m. it was around there. So we remove this for the main zone. And then 5 a.m. 5 a.m. candlestick was right here. So it formed right here. So we had a little bit of a minor resistance that was formed. As you can see, we had a little bit of minor resistance right here that was formed by the 4 p.m. candlestick. So in order for us now to start clearly market structure, we need first this resistance needs to be broken first. So as you can see, price came and broke right there at that particular point, and then we had our first higher high at this particular point right there. So this is our first higher high, and then here this one here becomes our first higher low. Remember guys, we are applying market structure. First higher high, and this one here becomes our first higher low. Then price came and broke our first higher high. As you know, when higher high gets broken, it forms our second higher high. So this one here becomes our second. This one here becomes our second higher high, that particular point. And then here becomes our second higher low. Can place it right there. So we have our first higher high, we have our first higher low, we have our second higher high, we have our second higher low. Then price came and broke our second higher high, creating our third higher high at this particular point. So we usually have another concept known as liquidity point continuation. So liquidity point continuation is usually found in between our second higher low and our third higher high, where basically it's whereby once the market has formed our third higher high, it can come and retrace back to our liquidity point and then continue going upwards. So you see, immediately we formed our third higher high. Now I was forced now to look for our liquidity point continuation, or our area of liquidity point that is usually found in between our third higher high and second higher low. So where is our liquidity point continuation? So we usually have areas that we usually look for, and that is the first touch. So this one is it right there. You can see right there. So we can remove this first higher high, you can remove that, yeah. So that will remain. You can remove this second higher high, because we usually look for a liquidity point that is usually found in between our third higher high and second higher low. And as you can see right there, this is the only first touch that you had right there. As you can see right there. So this is the only first touch that we had. So what do we do? So this is what we usually call our area of liquidity point. So we usually place our limit order at this particular point. So place our limit order at that particular point, and then what do? We usually risk like a little bit, like 30 pips. So let's say right there is 30 pips. So this is what we usually call an area of liquidity. So whenever price can come back to here, and when price retraced right here, once market structure has already formed a third high, we can have a little bit of retracement. And when price comes back to our third high, to our area of liquidity point, it usually can do this. So let me take something so that I can draw right there. So it can usually do this. It can fall right here, and then it can reverse. It should reverse. That usually is supposed to do. You see, it should reverse like that, like it can continuation, so that it can come and break our third higher high for price now to continue. You see, so that usually you so a liquidity point, an area of liquidity point is usually found in between our third higher high and our second higher low. But as you can see right in this case, in this our case right there, price came to our area of liquidity and it took us out. It broke. You know, it broke us out. It took us out. That is taking us out from this violating this area of liquidity, and it went ahead and also broke our second higher low. Now, what usually happens is once price our third higher low can never break our second higher low. That will means that the market structure it has already been violated, because our third higher low can never break our second higher low. It can break our second higher high, but it can never break our second higher low. So immediately our third higher low breaks our second higher low, it already means that market structure has already been violated, and we are already having a majority of sellers in the markets. You see, so when price came and broke our second higher low, it already tells us or implies to us that sellers have already taken full control and market structure has already been violated. That's why, as you can see, the area of liquidity point was not respected at this particular point, because the sellers had already taken full control, and what they do, they went and violated all of the market structure. You see, so that's basically what happened, and I took this setup and it was a loss. So that's a probabilistic loss on my end. I did everything. I followed all my rules. I followed everything, but the setup did not work. So that's how trading is. Trading is usually a probabilities game. You don't usually know the outcome of each and every single trade. So what you are supposed to do is you should always take your trades, and you should always take your edge as they present itself. The outcome is not always within your control. You see, guys. So that's a beautiful setup that you have just taken this New York session today on Wednesday. It is our first trade of the week. Yeah, so it is a beautiful setup. I hope you guys have learned something. I'll continue dropping my analysis on Trade With Me series. So guys, I hope you keep in touch. Make sure you subscribe to my YouTube channel, and let's continue, guys.